Day 2, part 2. Welcome back for the second segment of the trading course. Okay, so I hope you did your homework, and I have maybe responded to day 1 homework before you proceed to day 2. So if you haven't done your homework for day 1, it's wise for you not to proceed to day 2, because you are loading a lot of stuff, and these things, they take a lot of time to soak up in your mind. So don't do yourself a disservice and disadvantage yourself by skipping some homework. Okay, I know a lot of you were like me in high school, where I used to copy homework, don't write homework. In trading is different, guys. You need to practice and know exactly what the things will look like. No one is going to do it for you. I can only teach the things to you. I can't make the things stick in your head. The only way to make things stick in your head is for you to go back in the charts and mark up the charts. Okay, so let me get started with day 2. Okay, so on part 2 today, I'm going to talk mainly on candlestick patterns, the patterns variations, what will vary, what can vary. Like on the first day, I told you there are certain things which it can do, vary the severity of the stop and vary the times at which the moves come. Okay, so finally we are going to dive in the London patterns, type 1, type 2, and type 3. Okay, you have to understand what is type 1, type 2. Okay, so based on candlesticks, what's the definition of a candlestick? A candlestick is a representation of price movement within a period of time. If you don't know that, I have a video, go and watch a video where I explained candlesticks. Okay, so the candlesticks shows the footprint of the market maker, what the market maker has been doing. When the candlestick pains, the damage is already done. I want you to know that once it pains and closes, the damage is done. Here's what he wanted, because he's the one who created it. So it's us next. As soon as the candle is about to close, 3 seconds before, 5 seconds, and the trading criteria is being met now, and it basically we have candlestick patterns that we'll try to look for when we're trading. Okay, the first one is railroad track. Railroad track will be 2 equal side bars looking like this. Okay, sometimes they will have wicks, sometimes they won't. The size of the wick won't matter. What matters is the size of the body. So if we're at a high, this will be a green candle, this will be a red. If you are at a low, this will be a red candle, this will be a green. So what a railroad track represent is that I will define them for you later. Okay, I'm spilling the beans now. So we also have a morning star and an evening star. A morning star is seen at the low of the day, and an evening star is seen at the high of the day. So we also have a cord of wood. We have some hammers, doge, some spike candles. These are mainly the candles that we are only going to focus on. I know there are tons of candlestick patterns. There's a guy called Steve Nissen, if I'm still correct. If I'm correct, I read his book where he was teaching me candlesticks only. I had to know something like 7,900 types of candlestick patterns. It does not matter. Only these candlesticks will change your life. Okay, so what does each candlestick represent? I'm going to draw for you what each candlestick will look like. Okay, so I'm going to use red for this one. Okay, so a doji is something like this. Okay, a doji, the low of the day is held for an additional 15 minutes and allows the dealer to flash across or grab a few more contracts. He is just holding price taking out people long, taking out people short. It's just a cross. Sometimes you'll find it like this, sometimes it's like this. This is just a doji. There is no price movement in a doji. The opening price of the doji is the same as the closing price of the doji. Okay, next I'll move to evening and morning star candles. What an evening star, these are the definitions of the candles that I'm giving to you. Okay, so an evening or morning star is that the dealer holds the level, opens the spread, induces the people to take the continuation by having a doji or a hammer between two candles. Okay, so this is our evening star. Okay, something like this. A doji can be present or a hammer. Okay, so this will be, might be solid red. Okay, with some wicks they don't matter. This is our evening star. Okay, if the doji is to the low, okay, if the doji is to the low, it now becomes a morning star. I hope it's simple. You just have a railroad track with a doji or a hammer in between. Okay, I hope you can now see. So for hammer and inverted hammers, there are long types of hammers, hangmans, what you just have to know that this is what a hammer looks like. It doesn't matter where it's looking, it's a hammer. This is what I'm telling you. If you go and read the Steve Nilsson book, it's going to waste a lot of time for you rather than letting me tell you what I'm telling you. So these are the only candlesticks patterns you need to know. Okay, so this might be a hammer. Some will look like this. You see them if you go on the charts. If you have watched the previous video on candlestick, I think I've explained to you and shown you what a hammer looks like before day one, the first videos. Okay, so we have some spike tops and bottom tops, which are candles. These are used to create drawdown. Okay, so let me erase everything. You are at the low of the day. Okay, a spike bottom will look like this. Which will be a big green candle with a bigger wick. This wick induced people to sell, clearing the stop loss of everyone trying to buy in here. This is exactly what happened in here. Okay, this is a spike bottom and the spike top is something like this. The dealer trips increase drawdown immediately in one move. And the last one, we have our railroad tracks, two equal bars of opposite colors. If we are at the high, this one, if we are at the high of the day, this one is green, this one is red. If you are at the low of the day, this one is now red, this one is green. This is exactly what will happen. So railroad tracks, this the last one that I forgot to put in here. It's called code of wood. Those will be two sets of railroad tracks. Okay, two sets of railroad tracks. So you have 4 bars. So if you're at a high, you have green, red, green, red. If you're at a low, you have red, green, red, green. Okay, 2 sets of railroad tracks. A picture is more than 1,000 words. Okay, this is a railroad track. Okay, as you can see, we have 2 equal bars at the high and we have 2 equal bars at the low. So this will appear at the this will appear at the low and this will appear at the high. The hammer will appear anyway, and let me label this thing for you. This will appear at the low, this will appear at the high. This can appear anyway. This can be at the low or at the high. It doesn't matter the color of the hammer. The morning star will appear at the low and the evening star will appear at the high. Okay, the cord of wood with a red faced candle will appear at the low, just like a railroad track, and this one will appear at the high. I gave you the definitions of these candlestick patterns, what they are and when to look for them. So you need to look for these candlestick patterns in here. Okay, we have your consolidation, false move, pulls back. In here you start to look them at the second leg. So if you have a second leg and you see now you have a railroad track in here, two equal bars of opposite colors at the high, you see this thing at the high of the day in here, that's a sell. And if you see also this thing at the high of the day, that's a sell. Also this thing at the high of the day, that's a sell. Okay, then for the hammers, any hammer would be good, but if you are trying to sell, enter on a red hammer than the green. It's much safer to enter on a red hammer than a green at the high and a green hammer at the low. So this hammer, let's say low, this will be our high. Okay, so if we're on the other side where we are having a W formation in here, okay, we are looking for what? For these patterns around in here. In here I want to see my railroad track where I have a first green bar. Now I have a first red, sorry, then now I have what? A green bar. Okay, so this I will look for it on the second leg, and I also look for this on the second leg, also looking for this on the second leg, and also a green hammer on the second leg. Those are the candlesticks types that we will look for. Only for, don't ever go and read about the bullish engulfing, what, it's garbage. Don't do it. Okay, so looking at candlesticks, we have what I told you to be a vector candle. So vector is an engineering term. What it simply means is that we have magnitude, length, and direction. So the magnitude, which happens to be the length. For us, the magnitude for the vector candles, I told you it has to be 25 to 50 pips. Okay, the direction can be up, so it can be down, or what? Up. Okay, so you have your consolidation vector candles 1 2 3 to the high, consolidation vector candles 1 2 3 to the high. This vector candle, I told you it can be in 1 2 3 candles. This is why we don't buy after seeing 3 vector candles, okay, because it can add another one. Okay, so you have to wait for him to create a W in here and an M in here, then you sell. Okay, so what happens with the vector candles, what they will look like, I also told you sometimes it will be a one candle. I'll show you in an example. I have the example, I put it, it was a safety trade. I ended back around February, I think. I took it out and snipped it and put it in the slides. So they will look like price bets. They will be small, bam, bam, bam. Okay, bam, bam, bam. Okay, this is our vector candles, 25 to 50 pips. So retail traders, they call this momentum, and they can't be wrong. Okay, because you are seeing that price is moving 3 candles in this direction. They will tell you price is momentum to continue increasing, to continue rising, sorry. Okay, it will look like an anomaly on a chart that looks like a breakout. So for those who have traded breakout system, or having price breaking out from the Asian range, many people would buy trades breakouts, will buy on this move, especially if it moves 1 2 3. I told you many people will believe if they see something 3 times. Okay, it will be an anomaly on the chart that will looks like a breakout, and it appears for no reason that other than getting things going. I told you if your account is just sitting, you have $1,000 in your account, you didn't enter a trade, the money is no use to the market maker. I can't take it. That's why they will bring the vector candle, and they will usually make it induce you to enter a trade. Okay, it's an inducement phase, the phases of the market that we talked on day 1. I hope you still remember that. If you don't, please go and review the day one video. Okay, so this usually forms the second leg of the reversal pattern. So the vector will form, sorry, the first leg of the vector pattern. 1, 2, 3. The first leg is set in here. We have price pulls back and it will rise. This is our vector candles. I told you about vector candles. They called it 3 soldiers. When you see 3 green candles, buy, don't do it. Okay, let's look at the example. I told you 11 February. I entered a buy in here after this green hammer painted. I had been waiting for price to close above the 13 EMA, which is the red line, but after I saw the green hammer, I entered in here. My stop loss was here. I had to make my 50 pips. Okay, so what we have here now, what we now have here is that we have our Asian range being 14 pips. Tanaka said it should be less than what? 50 pips. It's okay. We now have what? Our false move. Okay, I told you the false move will come in one candle, but if you were watching this one candle like I did on that day, it was pumped 3 times. We had 3 5-minute candle inside this. Okay, making them clear and straightforward. It was clear for me. I knew today is the day I'm going to prove the bench. Okay, so the vector candle can be in one candle. As you can see, it should not surprise you when you see one vector candle. That's why you need to do your homework and make sure you know. Okay, this was another trade in level 3 on the pound pairs in October. After a big rise, we had a consolidation. I told you 50 pips, it's 48. It's good. 1, 2, 3. The low of the day is set. This is not a trade, please. This is not a trade. Okay, after these 3 moves, price rises, inducing people to go long and taking out those who are short. Finally, this was a news event in here. Okay, this was a news event in here where price broke on the 200 EMA, the white line in here, and trapped people of the 200. After the green hammer, you need to be long. You buy in here. This is what we are talking about on candlesticks. I hope it's super simple, clear, and you can understand what the guy is telling you. Okay, guys. The other one, let's see. I don't have. So when the market maker move, when the trip move is not met, the market maker will have 2 moves left. Okay, so if he does this, okay, 1, 2, 3, makes an M in here, and he does not have enough volume. Okay, you only have 2 things to do in it. It's either he can rise, hit the stops again, or he can hold the level. Okay, he can rise and then drop price, or he can come back, hold the level for more time, then drop price. He has 2 options. If he hold and sees that, yeah, I'm holding this thing for too long, then he will rise price, induce people, then bam, he kills you. Okay, these moves are carried out over a time interval and induce traders to take position. Look at my spelling of position. I'm sorry, guys. Let's talk about the high of the day and the low of the day. The high of the day, this is where we have 1, 2, 3, we have an M, and the low of the day, we have 1, 2, 3, we have a what? A W. Okay, the high of the day and the low of the day are extended quickly to trigger the stops and create panic. So if he comes above the high, he wants to induce people to continue to buy, triggering their stop losses. The same if he comes towards the low, he wants to make sure more people will sell, he will crash them. Okay, so what will happen is that the market makers will catch the initial HOD and LOD in 3 moves or 3 swipes to change your market psychology. This is the stop and from here. This is the 1, 2, 3 which you do from what the range in here. Okay, so if you induce you to change your direction and you want you to recommit your fund in the wrong direction. Okay, this is why the 3 moves appear on the chart. You make sure you will commit your funds the wrong way. Okay, so at the HOD and LOD, the first thing that you see is that the candlesticks will show wicks or pins to the side, which is tripping. So if you are at an M formation, you will see wicks to the high side. Is pushing price, dropping it, pushing price down, pull it off, pull it off, pull it off. This is what is happening. Okay, so the M formation zones will be worked for 30 to 90 minutes, sometimes up to 2 hours. Okay, a perfect M formation will take 8 bars, which is 2 hours. Sometimes it will be fast, 30 minutes, RRT 30 minutes, 90 minutes, Morningstar 45 minutes. Okay, the market will seem fast, but it won't be moving. If you are looking at the board, the price board, where you press Ctrl M on your MetaTrader 4, you will see the colors flickering very, very fast, but price is not really moving. He wants to confuse you to think that price is moving. And also at the high of the day, the spread is going to be high. Okay, the market will seem fast, but won't really move. So once their goal is achieved, they will shift off the low of the day and high of the day in one candle. Okay, consolidate, induce, 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 trip, trip. He now has achieved what he wanted to achieve. A shift candle will come into level 1. Okay, this is what will happen. This will be our Asian session. Okay, some candlestick types, as you can see them on the chart. This is what we call code of wood. It's represented as cow. We have our consolidation over here. This is tight consolidation. Okay, tight consolidation. We have vector to the 200 EMA. Okay, we have 4 side bars. After the third candle, you see, after the second red candle, sorry, which is the 4th candle at the high on the 200 EMA at the 25 pip measured box, which happens to be the high of the day, you are a seller. Okay, you look to exit your trade at the session change over, where we are getting into New York session. Okay, this is what code of wood, 4 bars side by side. With RRT consolidation 81 pips is because of coronavirus these days. Okay, those days, not this is back in March. There were the same day where I showed you that GBP card. I did not trade this one. I don't usually trade the railroad tricks unless they are a part of a bigger structure. That is the only thing that will make me want to fall forward for that trade. Okay, so in here we have our railroad tricks at the high of the day. These 2 equal red candles, green and red candles, sorry, is our what? Our RRT. We have our drops in price pushing 1, 2, 3 to create what? The LOD in the New York session. Price will always go back in the range. Don't forget that. If you buy this, don't ever think that price is going to come to this high. You will lose the money that you've gained. Always know that price will always go back in the range. This was GBP USD. I ended this one. Railroad tracks to the high. Asian box is big. Let's reevaluate our consolidation. I come here. This is consolidation. Okay. Factor move outside of the box. 1, 2, 3. He offers me a doji, a railroad track and a hammer. Look at how many candlestick types do you have. 1 doji, RRT 2, hammer 3. And if you were to look at this in context with these two bars, this is an evening star type. The reason why it's an evening star type is because I want you to first understand the RRT, what it is. Okay, we have 15 minutes up. Okay, in the next 15 minutes price will pull down. Okay, 15 minutes up, 15 minutes down. Okay, so in this 30 minutes price opened in here and closed here. So this on the 30 minutes chart, this will be a doji. Price will pull up 15 minutes high, 15 minutes down. It will close where it opened. This is why I was telling you this is a morning star, an evening star. I'm sorry. Digging deep and reevaluating the candlesticks. Okay, so for an evening star formation, this is what a clear evening star formation will look like. This AF Black, sorry, this is a clear evening star formation. After an evening star formation in the right segment of the market, you take it down. Okay, bam, let's go into the pattern variations. These guys, they are clever. They won't do the same things because some people out there are smart. They'll be able to figure it out. Okay, and see that this guy is repeating the same thing, which is the daily pattern. Smart people out there who can see that. But if you don't know it, you can't look for anything which you don't know. So the pattern variations which we have London type 1, type 2, type 3. These patterns are based on the Asian box range and the London opening. Okay, so our type 1 pattern is the typical market maker cycle where the stop hand will go above the Asian range and creates an M formation. This is a type 1 pattern. Okay, that is a type 1 pattern. You go above the Asian range, the high of the Asian range. If it's to the other side, it's something like this. Okay, you go below the Asian range, creates a W into this. For a type 2, the Asian range sometimes will be bigger. Okay, you do something like this. Consolidation vector is inside the box. Okay, creates the high at the box. Okay, same to the opposite side. You consolidate inside the box, the vector will come inside the box. That is the trick of this type 1 and type 2 patterns. The aim is at the high of the Asian session, it's not above like this one. Okay, the last type, which is the type 3, will look something like this. We have an aggressive move during the Asian session. Price will come and consolidate, okay, in here, and the stop hand will be made to the midline of the Asian session. So a W is formed at the middle of the Asian range. The same thing will apply in here. Okay, information. Okay, then this will be our consolidation. We'll probably have a disrupting move during the Asian session. Price will come to the midline of the Asian session. Okay, this is our consolidation, force move to the midline of the Asian session. So now I hope you can understand and see clearly what these type 1, type 2 patterns will look like on. Okay, so let's move forward. This is our type 1. This blue box is our Asian box. As you can clearly see, our aim was formed above the Asian range. In here you expect to sell in here, buy in here after 3 drops. Okay, you expect to buy in here, sell in here. So I think I forgot to tell you this. On the daily pattern, you can only enter 2 trades: a buy at the low and a sell after the high is created. A sell after the high is created and the buy after the low is created. Those are your only 2 trades that you only have to look for. This is our type 1. We are below the Asian box. The stop and goes outside the box. Let's look at some real chart examples. E.g., I entered this trade back in, it should be October 2019, I think. So we had our tight Asian range. Everything we talked from day 1 will still apply. We are still inside the Asian range. Look here. This is where I told you they will test your patience. The range is big. Okay, we have 1, 2, 3 in here. Price pulls off, comes back to the low. Look at this blue tracer in here. This is yesterday's low. Why is he at yesterday's low? Is tripping people off the last trip of yesterday. Okay, some people will sell this as long as price breaks below the low of yesterday. People will start to sell. Okay, look at the pins to the bottom. I told you pins will show to the side which is tripping. There are shorter pins to the high than to the low. So more pins are put to the low because it's tripping on the low. Okay, price rose for 45 minutes. This is not 6 to 8 hours. Why? Because the consolidation inside the Asian range is too large and the W formation took a lot of time to form, which simply means it had more money. He had to take this money in a very short period of time. 45 minutes he booked his profit. Okay, this chart is from 2001 GBP USD. The patterns don't change. 2001. Okay, tight consolidation, no Asian books, but you can see the consolidation. The pattern does not need indicators to be seen. It can be seen clearly on a naked chart. This is our consolidation. We start to have vector 1, 2, 3. The low of the day is created. The close above the 13 was our buy end. After 3 moves, you exit your buy, you enter a sell. The fact that it did not give us an M meant that on this day, if I was trading, I would not sell this thing. Okay, this one I showed you where I told you that the factor move was in 1 candle. We have price moving in 1 candle, going below the Asian low, repeating the low, ending up with a railroad track plus a doji, like a semi doji. You are a buyer. Okay, let's go for another type 1 going the other way. This is this year 2020. Information at the blue bearing. Okay, consolidation, it's good. 21 pips. Vector 1, outside the box 2. The third move is this with this pin in here. This high came exactly in here, but the fact that he had to open spread prior, he grabbed orders higher on this zone in here. It's because of the spread in here or the high. Okay, price pulls back, comes in here. The moment it closes below the 13 EMA, you are a seller. This is our type 1 pattern. So for type 1 London pattern, we are above or below the Asian box. Don't make a mistake, which is a typical market maker pattern. This is the pattern that I want you to trade. Don't jump for type 2, type 3. The reason why I told you that they exist is because you will see them in the charts for those who can see things. Okay, type 1, we do not have a W formation. For me, there was no entry in here. Consolidation 21 pips. I would have waited for him to come and give me something like this, then he continues, but he did not. Should I force him? No, he's the owner of the market, he knows what he's doing. This would have been a greater trade if he had came back to repeat the low. Okay, the force move 1 2 3 to the low of the day. Price will move in 3 pushes, but we have in what? An M at the end, railroad track, sell, end of the day, consolidation. This is our type 1 pattern. So now moving on into type 2. The only difference with type 1 and type 2 is that now the M is being created at the high of the Asian box. We have our consolidation. Okay, the vector, every aspect is still in. The only difference is now the Asian box. 1 2 3 creates the high of the day, repeats the high of the day. The HOD, okay, is it I can't tell because it's hard to write using a mouse. The HOD will be created at the Asian box high, at the high of the blue box. The same with the low, which is the W in here, where we are buying or selling in here, will be created at the low of the Asian box. So after 3 moves, we look for an M, New York reversal trade, we sell this shit. Okay, so let's move to the real chart. This is what a type 2 will look like. Consolidation, black consolidation inside here. We start to have our vector candles to the low in a 1 2 3. We create the low of the day. Look where the low is, exactly at the Asian low which was set in. For type 2 and type 3, it's more wise and good for you to do this if the Asian range is blown out. So sometimes the Asian range will need to be greater than what? Greater than 50. The Asian range, this one, will need to be greater than 50. It will be good. Sometimes it will be 28 like this, sometimes it will be 12. You only need to train yourself to see what these things will look like. Okay, this is another type 2. At the low, tight consolidation, false move to the low of the Asian box. Repeats the low of the Asian box, close above the 13 EMA, you are a buy. You look for 3 pushes going up, wait for your New York reversal trade above the high of the day. This was a head and shoulders pattern. If you still remember, I told you you have your shoulder, your head, your shoulder, then you sell in here. Okay, this is another example of a type 2. Type 2, we are at the low of the Asian box or the high of the Asian box. Consolidation inside the Asian range, re-evaluate, breaking out, breakout traders from this range. Vector move 1, it's kind of hard to read. Creates the high in here, repeats the high again, repeats the high again. If the dealer hits the high 3 times, it's not because he wanted to, or he felt pity for you, or The game is about the man, like I said before. Okay. The reason for him to come back to the high the third time is only because there's still more volume at that high. So you need to trap people off. Price will drop to the low of the day, goes back into consolidation. All the other aspects remain the same, ceteris paribus. Okay, this is a type 2. This is this year, I think. I remember taking out a trade similar like this. I don't exactly remember if it was this one, but this was the trade, guys. What do we have? Inside the Asian box, there is no consolidation. Consolidation is from yesterday. So actually the pattern of today started yesterday. This is our consolidation. Vector 1, 2, 3, creates the low, comes back below with a railroad trick, which is a pin on the 30-minute chart, then price rises, creates an M formation. Forget about the box, just see the pattern which I drew for you, which is the market maker pattern. So on this one, we had consolidation. Early inside Asia, we had our first move. So if you came to trade during the London opening, during this box, you missed the move. Should have came early to enter in here or in here. Anywhere else is too late, don't enter. Okay, so railroad trick. This was your entry. This was the perfect entry where you need to enter. So what will happen in here? We have vector move, hit the low, break the low, hitting yesterday's low. The blue line in here is yesterday's low, is scraping orders from yesterday. Okay, clearing people who are long, trying to swing trade from yesterday. It does not want them to profit. Another example that we have, type 3. Sorry, type 2. I'm sorry, confusing myself now. Is that the range is 11.4. This is tight consolidation. The first move comes up to the Asian high, repeats the high, price will pull off to the low, creates the low, New York reversal back into the range. This is a typical market maker type 2 London pattern. Another one, the same as the previous, where the consolidation comes from early yesterday. Okay, early in here. The vector move 1, 2, tap it again, hit the low again, repeat the low at the end of the Asian session, but does not come back to the low to the subsequent low of the Asian box is a bit higher than that. I think you can see that now the pattern is complete. You are long in here, you all have this move to capitalize on. So I think you can now see that if you are trading in line with the market maker, you have a higher chance to be right, make money, and always profit. So based on this, this is our type 2. Type 2, we have an MW3 is to the high being created at the high or the low of what? The Asian box. I hope it's simple for you to understand. Let's move on to type 3. So as for type 3, we are now at the middle of the Asian range in here. Asian range midline. The M is not at the low, is not below the W, I mean the M is not at the high, it's not above the high of the Asian range, it's at the 50% of the Asian box. Okay, so what will happen is that during the early Asian session, price will make a very big shift, mostly because it will have trapped traders. Okay, then towards the end of the box, price will start to consolidate, then the market maker pattern will begin. If you remove the box, you can clearly see the market maker pattern, which is inside. We have 1 2 3 M formation, 1 2 3 W formation, you buy, you sell. The same is here. Okay, is that we have 1 2 3 to the middle of the Asian range. We are not going below to create a W, no, we are at the midline, middle of the Asian range. We have our trend run 1 2 3 6 to 8 hours, create an M, expect a New York reversal. This is a type 3. What can I say about a type 3 again? Is that for type 3s and type 2s, they are much easier to see if the Asian range is greater than 50 pips. If you do your homework, you will see that these things, they are much easier to see with a blown out Asian range. Okay, so let's move forward to our type 3 in here. So on this day, this was pound Australian. I still remember it. I had an exam this day. It was in December 19. I don't know which exam I was writing. Was it thermodynamics or reactions? I don't remember. What happened on this day was that early in Asia, we had a move. This was GA, pound Australian. We know that in Australia, they opened their market earlier, okay, during the Asian session. So expect GA, AU, EA to move during the Asian session. We had this 100 pip move in here. Okay, so when we have this 100 pip move, the first thing that you were supposed to do when you're coming to a terminal, which I did, was that I knew it would be pretty hard for them to make a stop and go above this box. Okay, we either had to hit a type 2 or a type 3. This was a type 3. We are in the middle of the Asian box, even though it passed above and came back, then put this pin in here. Okay, so what I actually did on this day, I managed to enter this trade. I entered it twice. I still remember. I entered it in here. I had my stop loss. When the exam was about to start, I think this was the last candle that I saw. This one, I don't exactly remember the candle, guys. This was the last candle that I saw. I had entered this twice, which will happen to you sometimes. You can clearly see that now the type 3 was more powerful because of the pin to the high. This is a trap. Whenever you see a pin, it's a trap. Okay, that's a trap. It's trapping people. Consolidation in here towards the end of the box. Let me pick black. Consolidation towards the end of the box. Force move, pulls back, repeats the high. Price will drop in 3, pushes towards the end of the day back into consolidation. This is a typical type 3 pattern played out on GBP odd. This one I don't remember it. I don't think I took this one. Consolidation in here. We have a force move M formation at the middle of the Asian range in here. This is the type 3 London pattern. This is our Asian midline. Okay, so Let's move on to another. This one was a type 3 pattern, but I won't trade something like this. Our Asian range 64, it's blown. Look at this consolidation. Okay, vector 1, 2, the third move having its own 3 pushes. We created the low of the day on the middle of the Asian range. Price will rise 3 levels to create an M formation, then back in the range. I hope it's making some sense. This was another one. Hard to see. Can you evaluate it and tell me what you can see? Okay. What we had here was that we had consolidation. We had our M in here. Price pulls off for 3 levels. This is what happened. The reason why the range was not that big and it was a clear type 3 is because we had confirmation or a confluence from the moving average, which were acting as what? Not support, which were acting as a resistance. Okay, the moving average rejected price to break this midline of Asian box. This was pound NZD. I took the trade. What we have, 59 box. I told you the Asian box for type 1 clear market maker should be what? 50. Now it's blown. We had a first move, consolidation, fourth move, 1, 2, 3. Repeat the low, going below it again, comes back above, then back below to create the low, which is the second leg. If you look at the second leg, we have a what? A morning star in here. If you didn't want to enter the morning star, the close above the 13. Anyway, in here, no, it's too late. Your stop loss will be what? Too big. The reason why we try to enter at the high of the day, the highest points which are available to us, is that because we want to increase our risk to reward ratio and reduce the size of your stop loss. So if you can enter in a trade and set your take profit to be 50 pips and your stop loss is 25 pips, what it simply means that your risk to reward ratio is 1:2. How can you increase your risk to reward ratio? For you to increase your risk to reward ratio, you have 2 options left. It's either you increase your take profit or you decrease the size of your stop loss. So with the same take profit of 50 pips and now reduce your stop loss to 10, you have what? 1:5, because you have reduced the size of your stop loss. I hope this makes some sense. So finally, these are our pattern variations, type 1, type 2, type 3, as I drew them for you at the beginning. Let's do a recap. Type 1, we are above the Asian box and M is formed above the Asian box or below the Asian box. The 1, 2, 3 move will go above the Asian box. For type 2, the stop band will be at the Asian high or the Asian low. For type 3, the stop band will be at the midline of the Asian box or the midline of the Asian box, the M or the W. Okay, the type 3 will be mainly caused by early movement in Asia, which will happen to be the early news that happens in Asia. Okay, so today we talked about many variations, code of candlestick patterns, code of wood RRT, type 1, type 2, type 3, which happens to be the London patterns, 3 is to the high, where I told you that the dealer will do this: consolidate vector 1 2 3, creates the high, pulls back, make an M. Instead of dropping down, he will repeat the high again the third time, then draw. This is one of a signature trade. I will give you everything and show you it at the end of the day 4, or probably I'll do another video which might be day 5, where I'll give you the setups that you need to exactly look for. So for your homework now, what you need to do is you need to go and identify all the candlestick patterns, the pattern variations, and the London patterns. Do 5 for each, send them to me. I want to see your homework. Okay, install your MetaTrader, mark them up using MetaTrader. You can edit text or some boxes, or if you can't, you can do it on Paint. There are many options. Okay, so one thing that I need to tell is that the reason why some people are successful and some are not, especially when we consider that these people are at the same conditions, which is using the same method like we are doing now, the market maker method. You'll see that someone who will come after you to learn this thing might go ahead of you, because these guys, they will need to do their homework, learn their things very fast, and do how to make sure they will do the homework. Okay, so I will have to make sure that you okay. So we have come to the end of day 2. Make sure you do your things well, and if you did not understand anything, I don't know, try to snip these pictures. Okay, take pictures of each pattern so that when you are doing your homework, you clearly know what a type 2 will look like. Okay, so this pattern, you have to see it for the rest of your life, and you now know that, hey, this is a type 2. I now need to end along. I'm waiting for a type 2. It's not a type 1. Then you also need to create some flashcards of the patterns, where you mark off the exact ending of the pattern. Peace, guys. This is the end of today's session. I'm going to end here.